By far the best investment you can make is in yourself.
Hello investors, it's Ben with Market Evolution here. The past week has seen one of the greatest collapses in banking history since 2008 when the Lehman Brothers filed for bankruptcy. As of last Friday, Silicon Valley Bank, which is one of the 16th largest insured banks, came crashing down after failing to raise funds for withdrawal fees. Now you might be wondering, how does this affect me? As interest rates rise, money starts to get tight for the average person. Many people even resort to dipping into their savings accounts in their trusted banks. In this case, too many people were withdrawing money that the bank didn't even have. Silicon Valley Bank was poorly managed and made the decision to lock away $1.8 billion in US Treasury bonds for 3 years back in 2021. The problem with that is now if we were to pull out that $1.8 billion as a community, the bank would take losses by borrowing, which causes panic for me and you. Normally, a bank will receive funding from businesses to which they serve, but majority of these businesses were tech companies that have been doing historically bad over the past year. You might still be wondering, how am I involved in this situation? FDIC insurance protects any bank deposits up to $250,000. The issue with that is over 97% of the Silicon Valley deposits were over that $250,000 threshold. Imagine your personal or business account has $1 million invested with SVB, which collapses. You will only get back $250,000 of that. The other $750,000 goes down with the ship to cover losses. This causes a lot of the businesses that were with SVB to go bankrupt, which then leads to stock prices collapsing. Many Americans and even Canadians got left in the dust, all within the past couple of days. What might really hurt the economy is if the government, or the Fed in this case, prints more money to cover the losses in terms of Silicon Valley. This will cause more money circulating through the market, which leads to higher inflation. SVB was simply a poorly managed bank, so don't be too worried about your bank closing down. I think all these banks will learn from this and develop new skills and regulations to avoid another bank collapse. The main idea to take away from this is always diversify your investments and take control of your financials by educating yourself on how you can make the most amount of money through your investments while being safe in the process. I will leave a link for a short video in the description on how to understand markets so you can become your own money manager. Full disclosure, I'm not a financial advisor, just someone who knows what to look for in the markets. I do post at least one of these videos a week, so like and subscribe to keep updated.